Greetings once again. So this would be the second installment in section 2 spring, and we are calling it the roots. Okay, why the roots? Because the roots is basically the foundation of a plant. It is the foundation of a tree. And we actually want to establish how far will your roots dig into the ground, okay? How far will the roots dig into the solid ground to understand the very concepts, okay? And not only that, we want all of this to actually be how you understand and your perspective of the market. And inside this topic, you will be learning support and resistance. Okay, not because you will be using support and resistance in your trading, but because support and resistance is how you actually how you actually narrow down the scope, okay? We are only going to use support and resistance to narrow down the scope of technical analysis. And also because it helps finding market structure easier. So in this topic, you will be learning support and resistance levels, support and resistance zones, support and resistance trend lines, a bit about supply and demand zones, but not very heavily. We won't dive too much into that. And retest and accumulation and distribution. So in terms of this particular topic, accumulation and distribution, it is not going to be heavily based on the Wyckoff method, and it's not going to be heavily based on supply and demand or order action, but it will be based on order blocks, checkmate boxes, and bullish and bearish cycles. Okay, this term of accumulation and distribution will be based mostly on price action methodologies. Okay, so before we go any further, I still remember in the questionnaire, in the survey we actually did before you guys actually joined us, one of the questions was, in your own understanding, what is market structure? And many people call it swings, some call it impulses, corrections, retracements. But at the end of the day, okay, many of us come into conclusion that the market moves in waves, okay? So we're going to think like price action traders for the moment, okay? What makes up these waves? What holds prices together in the chaotic market movement? And you guessed it right. Structure. What is structure? Okay, let's first begin from the charts. Okay, everything that you are going to learn in section 2 spring is market structure. Okay, what is the structure of a tree? Okay, there are the roots, there is the trunk, there are the branches, the twigs, the leaves. Okay, all this actually makes up components of a tree. It actually makes up the structure of a tree. We cannot call it a tree if it doesn't have these components. Okay, so market structure is not about higher highs and higher lows, or lower lows and lower highs. It's not just about support and resistance. It's about all the components that you understand about the market coming together. Okay, so you can go through this yourself, and let's carry on from here. Okay, so price action. So if you actually take it directly, the charts is price action, okay? Because the charts show prices. The charts do not reveal the orders. It only reveals prices, okay? So the roots is the main structure, the foundation, okay? Then you have the trunk, which is support. And you have the branches, which is resistance, okay? All these are analogies. Then you have the leaves, patterns. And then you have twigs, which are ratios and so on. Okay, so all these can be contained or identified as indicators. It can be identified as fundamentals or the sentiment. And most price action traders will actually use this for confluence or confirmation. Okay, so the whole idea of us actually explaining all of this is because we want you to know the true meaning on how prices actually move. Because everything that we have just explained for the past 5 minutes is not how it's not how prices move. It is just market structure, okay? Prices is moved by the orders, not structure. No matter how many times other traders will actually try to emphasize and tell you that market structure is what moves and tells you, they will tell you that market structure actually emphasizes and tells you how prices will move and what will happen next. That is actually wrong, okay? Because the only market structure that actually works is the ones that so happen to align with supply and demand. Okay, let's not get too much into that. Let's not get too sidetracked. Let us first begin with support and resistance levels. Okay, so look at the chart forming right there. So basically, most of the time, people will actually say that resistance levels are actually a higher price level of significant value, which is often misunderstood. Most of them will actually say that resistance is the ceiling. It will prevent prices from going higher. And support is the floor. It will actually prevent prices from going lower. Okay, so this is often misunderstood. Okay, it is not a place where a place that holds prices from going higher, and it's not a place that holds prices from going lower. Okay, so how do we know that support and resistance actually hold value? Okay, if you see right over here, it is about identifying equilibrium. Okay, so the easiest way to actually start is to ask yourself a few questions. Okay, how do we know such levels hold interest? It is because prices reversed from it. Okay, prices found it significant to reverse from it. Prices came back to it. Prices tested it. Okay, all these questions are popping out. Okay, but I want you to take a look at what is on the charts right now. Okay, you can actually see white color circles and red color circles. And the reason why I didn't mark the red color circles as resistance and support, it's because those are known as fake outs, right? So I'm pretty sure a lot of you are quite, you guys actually understand what are fake outs. And for the past 2-3 weeks with me in MINTEDSEED, I've actually revealed quite a number of modules. And the first module that I actually, or the action module that I actually introduced, is actually the two-way trap. Okay, try looking carefully and identifying the two-way trap over here. It's actually quite obvious, okay, especially with the red dots marked over there. But what we're actually trying to emphasize over here right now, it's not supply and demand, it's not order modules, it's support and resistance. And the next one is, some people will actually tell you that, how do we actually draw support and resistance? Some will tell you that you have to draw it at the tip of the wick. Some of them will tell you that you have to draw it at the close of the candle. Some of them will actually tell you something else. They will tell you that you have to draw your support and resistance using the line chart. So basically what they're actually going to do is, if you see, they actually start drawing out their support and resistance, and they will switch over to the line chart to see how it actually aligns, and if it actually makes, not make alignment, if it actually connects nicely. It just looks better, it just looks cleaner. That's just about it, okay? It doesn't actually tell you anything, all right? And some of them actually they will actually tell you about how many times the levels were tested, okay? So over here you can see actually 4 diagrams: peaks, valleys, M moves, and W moves, okay? So basically M moves are double tops, W moves are double bottoms, okay? It's quite that simple, but they will actually tell you that a good resistance is actually tested at least twice. A strong resistance is tested 3 times, okay? And a good support actually forms a W move, which is tested twice, making a double bottom, and a strong support, a really good support, will be actually tested 3 to 4 times. which actually doesn't actually make sense. Why do I say it doesn't actually make sense? Come on, find the logic behind it. Are you trying to tell me just because prices bounced off a particular level twice, it will happen a third time, it will happen a fourth time? No, you cannot actually explain it because there are no orders located there. Okay, the only reason why it bounced off that level, it's because first, manipulation is going to happen. Second, you were probably lucky and there were orders at that area. Okay, there is actually a saying, support and resistance cannot be supply and demand, but supply and demand can sometimes be support and resistance. So currently right now that saying doesn't really make much sense because I've actually heard some price action traders saying that support and resistance and supply and demand is basically the same thing. It is not the same thing, okay? And this is where we actually want to say so-called support and resistance are not stronger when touched more times, but rather more significant. Okay, this is what I want to emphasize over here. Just because a particular level was touched more times, it doesn't make that level stronger. It just makes that level more significant. And that is where the question pops out. What significance? What makes that level significant? Okay, and let me tell you what significance does it hold. It holds significance of manipulation may occur. Where you are actually going to place your stop losses becomes more obvious, okay? So here I've done something quite here, which is a bit it's more of a brainstorm thing. Support and resistance becoming supply and demand. Well, not literally, but there are times when support and resistance can transform into supply and demand. If a single swing from resistance breaks support, then that resistance becomes supply, vice versa for support. Okay? And that is the key word. A single swing from resistance breaks support, then that resistance becomes supply. Okay? So if you look at the two red color horizontal resistance lines, okay, over there it says resistance that broke support, okay, and you can actually see the dotted blue line. That is where the support was actually broken. So when prices return to that particular resistance level, there is most likely going to be another sell-off, okay? So this is really basic, okay? This is really basic because most of the time you will be actually learning that upon the break, resistance becomes support, and upon the break, support becomes resistance. Well, over here, I'm actually explaining something else. I'm saying that resistance will remain as resistance if it breaks the support. It doesn't mean that that becomes a particular area where the significance is actually lost, because that is where most likely there are more orders located. And I know it sounds confusing right now, but we'll keep this topic mainly towards support and resistance, and we will not go too much into supply and demand. So technically, let's go into a support and resistance session. So keep in mind everything that you have learned from section 1 and previously. Keep in mind swings, ranges, buying support, selling resistance, buy low, sell high, and identifying repetitive patterns in the market. So this is how the typical price action trader will actually start trading. First of all, prices make a move. So what are you going to identify here? The easiest thing that you can identify to contain prices is support. And the next thing, resistance. Okay, so prices decides to break the resistance. So if it breaks the resistance, what happens? It forms new resistance. Prices comes back down, goes back up. What happens? It forms new support. Okay, and this is where you can actually see that repetitive patterns may occur. If you look at this particular area here, these two areas over here, it has a movement of a similar fashion, and this similar fashion actually causes prices to move up. Therefore, as a price action trader, most traders would actually try to buy in this particular range, in this particular consolidation, because they are hoping for a breakout, a break to the upside, which will create resistance. Okay, so when prices retouches that resistance, it will most likely fall again. So you can actually see that there is some logical sense in support and resistance, right? But technically, if you were to actually look at it carefully, why why not, instead of telling yourself, oh, I'm going to sell resistance, I'm going to buy support, why not you ask yourself another question? Why did prices reverse from these levels? Okay, it did not reverse from these levels because these levels were support and resistance. There was a specific reason why it actually reversed from those levels. The reason why, it's because they were orders. Someone, an institution or whatever, actually placed orders in that area. That's why prices moved from that area. That's why prices bounced off that particular support and resistance. And this is why you have to ask yourself, why that particular resistance? Okay? And this is what we're actually trying to emphasize over here. But let's now jump into the next topic of support and resistance, which are zones. Okay, still remember we were talking about how do we actually draw support and resistance. Some will actually tell you that you draw support and resistance from the wicks. Some will tell you that you have to draw it on the candle close. And some others will actually tell you, no, you have to draw it from both. So how do we actually draw it from both? You actually can if you draw it into zones, okay? So if you start to remove the levels and just keep the zones, these are known as support and resistance zones. And there is a lot of traders out there that misunderstand zones. They think that zones make up supply and demand. No, zones do not make up supply and demand. Okay, and the next one is trend lines. Okay, trend lines are just possibilities of trend changes. Okay, it does not represent, they are not actually price action levels, though it may seem magical. Okay, sometimes when you actually put out your chart, you look at the chart, then you start drawing your support and resistance, and then you start drawing your support and resistance zones, then you put out your trend line, and you'll notice that, wow, this trend line seems to align perfectly. Okay, it does not actually align perfectly because prices actually moves in fractals. Okay, you will be learning fractals and cycles later on in section 2 spring, so we won't be talking too much about fractals right now. But upon drawing your support and resistance trend lines, you actually take note on how prices actually touch each support and resistance. You actually take note on how prices touch each support and resistance zones, and you actually take note on how prices touch the support and resistance trend lines. And when you do that, you can actually reduce and re-identify how price action actually can be contained. Okay, so currently, just now, previously over here, you can actually look at your charts being quite messy. All right, all your zones are huge and all over the place, but upon identifying these confluences, you can reduce the zones and reduce the amount of levels in your charts. And the good thing about this is it increases probability, because you can actually see how prices react to these zones. Okay, so I won't be telling you, these are very basic price action trading methodologies, and a lot of price action traders actually do this. And what they actually did is they narrowed down their scope of analysis, and somehow it managed to somewhat apply to supply and demand. It somehow managed to have some confluence with supply and demand. but you're not going to use all these methods to find confluence. I'm just saying, okay? Okay, the next one is support trend lines. We'll talk a bit more about trend lines because most of the time people use trend lines and say the trend is your friend. So if you look at this, what does this look like? This looks like an uptrend, okay? So since it looks like an uptrend, most of you will be identifying high lows and higher highs. You will be identifying points of interest where you will want to be placing your orders, and then you will be placing in your support and resistance, whether it is going to be a diagonal one or a horizontal one. And you're going to map out the possibilities where BO, the red dot, is the red circle, is actually breakout, and RT is retest, and RT2 is the next possible area of retest. Okay, so most of the time you're going to be placing your orders at these particular areas. And sometimes it may seem to work, okay? Sometimes it may seem to work, and sometimes it doesn't work at all. And most of the time, when it doesn't work, you will be actually blaming the charts that, oh, okay, I didn't have enough psychology, my psychology wasn't good enough, or I did not find enough confluence. I should be using the Fibonacci retracements, I should be using chart patterns, I should be using harmonic patterns, I should be using candlestick patterns. You start making up all these stories about why your trade didn't work. The fact is your trade didn't work because there wasn't supply and demand, okay? The next one is resistance trend line. Same thing, you look at the chart, it looks like it's going for a downtrend, and upon that you'll be marking your low highs and lower lows, the places of your interest, and where you will be placing in your support and resistance, and you will be also making terms on where the possible trades may occur. Okay? And these all boils down to one question. Most of the time say significance only happens to support and resistance if prices make a retest. Okay, so over here we talk a bit about market rules to find significant levels, the retest. So you can read this if you want, okay, but you don't actually have to read it because it is basically explaining the last kiss, okay, but with a twist from Minted Seed. Okay, so what is the retest? It is to find significant levels, the shift of level functions, okay? So what is the shift? The shift is when support becomes resistance and when resistance becomes support, okay? So breakout trading 101, as stated, breakout trading doesn't work because we fail to enter at best prices, okay? Because most of the time you're going to wait for the candle to close above or below the level, only then you will enter. But there is a high chance where prices will return to the level to retest it, okay? So why not you enter at the retest, okay? But let's show this on the chart to make it easier for you to understand. So when you actually look at the chart, you're going to make an analysis. So you do your typical analysis of support and resistance, then place in your trend lines, which act as diagonal support and resistance. And if you notice over here, the heart shape, okay, there are 1, 2, 3, 4, 5 heart shapes. Okay, whenever a breakout happens, so you see the first white line at the real bottom there, prices broke out, it returned to the white line, which was the cross section of the trend lines, and that's where prices actually made the retest. It broke out the second resistance, returned and made a retest, okay? So prices started to move out. If you look at the blue diagonal line, the blue support, prices broke out, returned, it touched, okay? It touched the resistance, which is the red diagonal line, and that's where the retest happened. However, it returned further up to create a double top, and that double top was the retest of the resistance. Then prices came down, yada yada yada. Same thing actually happens, and most of the time people will call this the last kiss, okay? So you can read this yourself, you can pause the video and actually read this yourself, because we don't want to be going too much. Let's just run through this quickly. And the next one, this is the daily chart. Same thing actually happens. You will be, but the difference in this one is I actually marked out a quick supply and demand zone. So you have your trend lines, your trend line support and resistance, you have your horizontal support and resistance, you have your zones, okay? And these two areas are where significant, okay, are where significant retests actually happened, okay? So now let's carry on. Same thing over here. So we're going to have a session right here. So if you look at the charts, the first thing that you will be doing is you want to find the support and resistances. Okay, the reason why we are doing these exercises is it's because by doing this, you may narrow down your technical analysis and it may align with supply and demand. Okay, so that is why a number of traders that were actually trained by me, they did not actually want to learn order action. And I asked them, why don't you want to learn order action? It's because they told me that price action works for them. I said it could work better if you understood order action. And they told me that no, it's okay, the price action you actually thought us somehow works. Okay, so it's because I have redefined price action and redefined the methodologies to make it somehow align with supply and demand without you guys actually noticing it. Okay, so the first thing you actually do is find support and resistances, find the trend lines and swings, find the support and resistance zones, find the supply and demand zone. Okay, I'm not going to draw out every single supply and demand zone. I'm just going to randomly draw it in a big picture. Okay, so technically this is not 100% supply and demand. The reason why I'm drawing it like this is just to give you a picture. Okay, identify where you're going to make your buying and selling, and identify valid reversals or retests. Okay, so most of the time when you actually study this, if you were to actually study this, you will actually identify that these particular areas make up the best areas to chart. And if I were to actually ask you guys, this particular question, do your standard technical analysis on this chart. How will you do it? Okay, some of you, if I actually want to, I can actually see quite a lot of things here. I can see a cipher pattern, I can see a godly pattern, okay, I can see a head and shoulders pattern, I can see a triple bottom, I can actually see so many different kind of candlesticks, I can see, okay, whatever about that. So for your next assignment, I want you guys to do your own method of technical analysis on this particular chart. I'll post it in the group, and let's see how you will have your final outcome of technical analysis if you will achieve something similar to this. Okay, and the next thing we're going to go through is accumulation and distribution. Okay, so prices actually, what is this all about? It's how trends actually begin. So this is a small shift, okay, just a small hint on how actually prices move. Okay, not exactly, but we're getting there. Okay, accumulation is where prices actually collects, where actually orders are collected. A reversal pattern is where a stop hunt may be actually happening, so accumulation, and prices drop a little, so many sellers are jumping in to the market, and all the buyers will start selling to these sellers. Okay, and they're going to sell in terms of fractals, they're going to sell in terms of blocks. Okay, so all these blocks are actually orders. Okay, so all these orders will be making high highs and high lows before a reaccumulation may happen or distribution cycle. So how does this actually look like in the chart? Okay, accumulation happens, then prices rise up, make a trap. Why do the traps actually happen? The traps actually happen for breakout traders. Okay, so whenever a breakout buyer buys, prices return into the block because they need to stop out the buyers. Okay, and at the same time when prices actually return into the block, many sellers are going to sell, and prices actually continue its up move, stopping out the sellers. So this is how actually prices actually move, okay, by creating liquidity. Okay, it doesn't move because people are trapped. Okay, it moves because liquidity is collected. So you can actually read what is going on in here. And the same thing actually happens for distribution, the distribution phase, in which prices are also accumulated, a reversal pattern or whatever comes up, okay. And the same thing actually happens for a bearish move, okay. So currently right now it's quite simple for you to understand, but let's jump into the conclusion of roots step by step. What is technical analysis all about? So first of all, you need to have the roots. Before even executing a trade, you first need the roots to actually grow, okay? So the first three major items you actually need to understand when actually trading, before you even get into order action, you have to first understand price action. And before you even get into price action, you first need to understand technical analysis. You need to understand that it is all about market structure, and the very base of it is support and resistance. Okay, it's quite simple. Okay, to actually understand price action is simple. And what is price action? Price action is reading prices, okay? So we are going to teach you how to read prices first. You have to know how to read a book before you can actually write a book, okay? So reading price action, price action is all about reading prices on the chart, okay? You are not actually writing. But order action is writing. You are not just reading prices, you are identifying where the orders are located. Okay, so let's get back into the topic. So for you to do these three items, technical analysis, market structure, support and resistance, you need to identify support and resistance levels, zones and trend lines. And to identify the significance, you will be identifying the retests, okay? And from then on, you will be identifying market rules. The article just now that I have written, you can actually read through that and try to identify and do some research on accumulation and distribution, okay? But accumulation and distribution, at the end of the day, it's all about how liquidity is collected. How do the liquidity providers actually collect liquidity to actually move the market? And some of you may actually believe that it happens because of the repetitive behavior of all the traders in the market. Okay, some believe it's a oh man, how do I actually pronounce this? Some of you actually believe that this is the repetitive behavior that causes balances and moves in the market. Okay, but first understand it, because this will be your first step in identifying price action. Okay, so this is quite a long topic. It took longer than expected, but we have come to the end. And let me just emphasize one more time that you can actually go through all of this again and identify the differences between how we actually identify support and resistance. But what I want you guys to do while doing that, okay, what I want you guys to do while going through the notes is I want you to do something extra, which is identifying where you will most probably place in your stop losses. Okay? And from then on, we can start truly identifying and understanding where many. Let's close right now, and I'll see you in the next one. Thank you. Close right now, and I'll see you in the next one. Thank you.